To the trading, we've spoken about the kingdom, we've spoken about everything else, and now the question is, how do you start reading charts, how do you start understanding certain things? Kan jy baie mooi sien, Bonzai? Alright. So the first thing you need to understand when you're starting to trade cryptos is you are going to become your own bank. Okay? We're currently, as Anna described this morning, with the bank, they've got their systems, they've got all their securities in place, they've got anti-hacking stuff in place, people can't just hack into the systems and everything like that. And if something happens to your money, you phone your bank manager, you phone the guy in charge of your account, or your private banker, or whatever the case may be, and you tell him, listen, this is what happened, sort it out. In the crypto world, if you make a mess up, there's no one to call. It's gone. It's that simple.
Phone a friend.
You can phone a friend and cry on his shoulder, but that's as far as it's going. Okay. So in the crypto world, when you move money, you've got to realize that I've moved money from one account to the next account. Oh, I think I just slipped on the cable. If I move money from one account to the next account and I did not pay attention on how that money was supposed to move, or I got the account number wrong, or I didn't double check every step of the way, and I made a transaction and it goes to the wrong account, it's gone. Because I don't even know who I paid it to. Account numbers in the crypto world are literally a string of numbers. Computer generated numbers. Okay? So in many instances when we move money, we do not try and replicate the account number, we just copy it and we paste it. But the point I'm trying to bring across is, you are now becoming your own bank. So when Arno was talking this morning about opening up trading accounts, the first type of account that you will need is a South African exchange. Okay? Yes, there are exchanges overseas that do allow you to buy with credit cards and stuff like that. Legally, it's not really allowed anymore, although it is still possible to a certain degree. Okay, but a lot of the banks in South Africa are clamping down on this because of the tax rules concerning buying foreign currencies. Up until this year, it wasn't an issue for nobody because no one really cared about the crypto market and no one really thought it was a big issue. And now this year, it's becoming a serious issue to everybody. Okay, because you are literally moving money out of a South African bank account, or you sit now in Dubai, out of your Dubai bank account into a crypto space which no one controls anymore except you. Okay, and the banks do not take lightly to this. When Valor was started in 2019, April 2019, the former CEO of FNB, Colin Jordan, started Valor. He left FNB and he started Valor. Within the first 5 months, he moved 5 billion rand out of FNB investments into Valor. Okay? Obviously, he had connections with all the top brass that was investing in FNB, and he got them all to start investing in cryptos. Okay? Needless to say, they will never leave the crypto space because, I mean, if you just look at what Bitcoin did in the last year, as Arna spoke this morning, I bought Bitcoin last year, April, at $5,400. I then panicked when it got to $13,000 and I sold it. And then it hit $65,000 8 months later. Yes. So just imagine. And I had 4 of them. Okay, I let them go. So, that's what happens in this market. Okay, at the end of the day, I've got to become peaceful in myself and say, I made profit. I more than doubled my profit in 4 months. I more than doubled my value of my portfolio in 4 months. Okay, so the first type of account that you will need, and I think Arno sent it out this week, I don't exactly know what he sent out, I didn't read everything, is you're going to need a South African exchange, whether that be Luno, whether that be Altcoin Trader, or whether that be Valor. Currently, I just use Valor because that's the account I was taught to use. It doesn't mean to say Luno is bad or Altcoin Trader is bad. I think they're all brilliant accounts. I think Altcoin Trader allows you the most type of trades in South Africa at the moment, okay, for the rand. Luno and Valor is a little bit limited. With Valor, for instance, I can only buy 3 coins from rands. I can only buy Bitcoin, Ethereum, or Ripple. All the other coins in Valor can only be bought with Bitcoin or with Ethereum. They can't be bought with rands. Okay? Altcoin Trader, you can buy a lot more coins with rands. So depending on which, but you need an exchange. Why do I need an exchange? I've got to get money out of the fiat currency of rand, and I've got to move that money into the crypto market. And we basically, if you want to describe it in the form of a picture, what we say is, You are riding on a highway and you want to take the off-ramp onto the crypto highway. Okay, so you're changing between the N1 and the N3. So I take a specific off-ramp onto the crypto highway, but to do that I've got to take my money in rands, I've got to move it into a crypto exchange. From that exchange I've actually got to buy a crypto. Now that crypto, once you have it, you can move to any exchange in the world. And no one knows about it. They're trying to know, they're trying to control it, but currently they don't know. So recently South Africa tried to bring out a paper saying, well, they brought out the paper, it's available, where they're saying that it is now becoming illegal to buy cryptos in South Africa with rands and then to move those cryptos to overseas exchanges. The problem is they can't stop it because they have no control over it, and that's their biggest thing. So how are they currently governing us? They're trying to govern us with fear. If you do this, we will do this, and if you do that. The problem is there's no central computer. They can't log into any computer and say, oh, Jan moved money last week. It went into the crypto space. They don't know. And they can't access the data. And that's the problem. So all they can do is make you afraid of, don't ever trade crypto, it's scary, it's not safe, it's not this, it's not that. Watch out for this space, watch out here. That's all they can do. You watch the FSCA, every time they bring out a warning, just be careful that crypto is a very volatile market and you can lose all your money. It's the only thing they say. Other than that, they can say absolutely nothing. Okay? The problem is, they've always been taking your money that you've always invested in the bank in fixed deposits and things like that, and they've been using that money to invest, not in cryptos necessarily, but in the stock exchange. Then they make the 100 times returns, and they're giving you pittance for what you are getting. At the moment, I think it's 5 or 6% is all you can get. That's what swung my mind last year in April. Okay, I had money saved over a number of years, close to $500,000, and I was earning 1,500 rand a month from there. And I decided that's it, I'm done with this. And I took the money and I put it into cryptos, and within 4 months I doubled it. So just to give you an idea of, it's crazy. So the first thing you need is you need a South African account, a South African exchange, either Valor, either Luno, or Altcoin Trader. I don't want to go into too much detail today on how to open these accounts, okay, because that's going to take away our time from what I want to teach you on taking the fear out of reading a chart. Okay, because that's what we actually want to get to today, is reading charts, how to read charts, how to understand when a crypto is going to run, when it's not. As I was saying to the guys outside, I was watching this early this week. It was for about 2 months I haven't been watching. The market took a major crash and I was just watching my portfolio. Wasn't really looking out for new coins. Earlier this week I got to sit down, I said, okay, I've got some time, and I switch on my computer and identify 2 coins that are going to run, because everything in my analysis says they're going to run now. And I didn't do anything about it. And this morning I was watching Coty at 40 cents early in the week, and I saw it drop back to 39 cents, and I thought that's a good sign, it's going to break out. I better buy some Coty. I didn't buy Coty, and this morning I walk in here and it's 59 cents. That's in 3 days, literally. Okay, so it's now 63 cents. Okay, okay, so that's what it's done in the last hour. Okay, so bottom line is now what people will normally do is they rush in, they're going to buy Coty. What I want to teach you today is you don't do that. You go and read the chart again to see, is it going to make another run or is it not going to make a run? Is the run finished? Is the run not finished? Because what most people do is they get in after the hype. Okay, they hear the hype, the newspapers or someone has said, this thing's going to run and this thing's running, but by the time the newspapers and the media get to it, it's already done it. Now what people do is they go buy it now. Then the price falls first. And the first thing you've got to realize in the crypto market, or in any market for that matter, is that markets are constantly going up, then they're coming down, then they're going up, and they're coming down, they're going up, and they're coming down. Okay? And what newbies tend to do is, they get the hype, they end up buying it up there, the price falls, and they end up selling it over there. What has he just done? He's made a loss. He gets panicked, he gets spooked, and he never gets back into the market, because you lose money in this market. And he's just programmed himself, this is where you lose money. Okay, and he's not going to touch it again. He's just lost money. One thing you have to learn when you're trading cryptos, or when you're in this market, or when you're functioning from this market is, the market's going to turn. Always. It will always turn. And one of the first things I want to teach you today, when we start looking at the charts and things like that, is that the first thing I do when I start looking at a coin, and when I look into the charts just now, I will show you, is I don't look at what happened this week. I don't look at what happened today. I zoom out and I look at what happened over the last few months. Okay, you always let history to tell you where it's going next. If you're going to focus just on the small little piece of what's happening now, it's what we do many times in our lives. Something happens to us and we end up focusing on this little thing that happened. Instead of taking 3 steps backwards and looking at our life over the whole picture and have a look at what actually happened over the last year or two, we're actually on an upward trend. We've hit a bit of a bump, but we're actually on an upward trend. Because overall, we're upwards. Overall, we're still okay. Yes, we've hit a hiccup and it's a painful hiccup and it's hurt us and it's damaged us and it's done this. But let's not focus on the hiccup, let's just step backwards. Okay? Now, I like, when I talk about cryptos, we always tend, when we're buying cryptos, we compare it to the current currency that we know, to determine whether I've lost money or whether I haven't lost money. And unfortunately, that's the way we've been programmed. Okay? We make money in rand, we make money, and we measure everything in rand. Currently, I measure everything in dollars because I'm out of the rand system already in my mind. I don't trade in rands. Okay, I trade in dollars. But the same thing. We keep comparing what we have purchased with what it was worth in dollars yesterday or what it was worth in rands yesterday, instead of starting to realize that the crypto itself is an asset that cannot be measured against something that we own. And once we start realizing that every cryptocurrency has an asset in itself, you start seeing the thing differently. And you start looking at it differently. Okay? So that's a very, very important lesson, that we start paying attention to what the cryptocurrency actually is and what am I actually investing in. Yes, what we are teaching you how to do now is to ride the wave of whatever this thing is doing, irrespective of what the coin might or might not be, although it's very good to know what the coin is. But even where I am today with all the money I've made in cryptos, I still don't know what every coin does. I can read it when it's going to run, and I can read it when it's stopped. And I ride the wave. Okay, so you learn how to buy low and sell high. Me, myself, I don't know what he was speaking just now about hodling. Let's see if we can find that page of his. We'll get this one. When you're talking about hodlers, investors, traders and scalpers, I currently function here under traders. I mostly do swing trading, I mostly do day trading. I do not like scalping. I've done it. I can do it. But scalping wants you to sit in front of your computer 24 hours a day. And that's what the guys literally do. And on the scalping dens and stuff that I've been part of, you sit and watch how these guys 2 o'clock in the morning are finding coins and they're too scared to go to sleep and they're too scared to this because what if it's this, and it'll drive me totally nuts. Okay? So even with my trading, I do not sit in front of my computer all day. I will go to my computer 6 o'clock in the morning, I will switch it on. I've got 20 odd coins that I'm watching because I've determined these are good coins to be watching. I will scan through my charts, I will find the ones that are running or possibly running today. I will see which ones have lined all my buy signals together. I will then buy that coin. I will then look at my Fibonacci levels to determine where it's going to go to next, or where's the next resistance level before it's going to turn around. I will put in a sell order just below that resistance level on those coins, and I will walk away. I'm done for the day. Switch off my computer and I let it be. And then I've got the app on my phone, and every time I sell something because I've hit my target, it just says beep, 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 beep. And I know that program has got that sound. I've just sold a coin, which means I've made a profit and I know where I sold it at. End of story. It's as simple as that. I carry on with my day. I do not let trading run my life. Okay? It's a good way of making money, but it must not consume you. Okay. Right. Then when we're talking about exchanges, which I spoke about Valor, that's the first way to get your rands out of rands into cryptos. From there you can move cryptos anywhere. I currently personally trade in Binance, which is an overseas exchange. Alright? There's a lot of things in the news about Binance recently, and the fact that Binance's head office, I think they sit somewhere in the Seychelles or something like that. And as you know, most large companies nowadays that don't want to be governed by anybody go to a country that doesn't have very much governance. Okay? Now that can be a good thing and it can also be a bad thing. Alright? But Binance has been under a lot of scrutiny this last time, especially over the last 2-3 years. And it started with America, forcing all the Americans they may not trade on Binance.com. The main reason for that was Binance allows leverage trading that Adnan spoke about earlier. Leverage trading is trading with money that you don't own. Trading with money I don't have. Okay? So if I can teach you one thing today, you never, ever, ever touch leveraged trading. It's a quick way to make great money when the market is going north, and it's a much quicker way to lose everything you own when the market goes south. Okay? And if you told me the market can go that far south before May, I would not have believed you. And in May month, I watched the market go south on all my investments, and I saw my investments drop down to $40,000 in a minus. Okay? But I just I'm at peace, because I'm not functioning from that system in Mammon. I'm functioning from God's kingdom. God said I will have what I need to have. Now He's teaching me how to be patient. So you're patient, you ride the market out. The market still rode in that bad time now in August. I still did a good $11,000 for the month. Okay, on trading, just buying and selling, and mostly ADA, because ADA did a few beautiful runs, up, down, up, down, up, down. I kept on buying low, selling high, buying low, selling high, buying low, selling high, and I made a killing in the process. Then the market turned around on me, and it went up, and I thought, beautiful, here it is. I don't have to apply the rules, I don't have to apply my stop losses, we're definitely on the way up, and 2 days later, down, flat, wipe out again. But I haven't really wiped out. Because only when I compare what I have to dollars, or when I compare what I have to rands, have I wiped out. I mean, you buy a house to live in. Do you sell the house when the property market goes for a loop because it's not a good investment anymore? No, you still live in the house. Okay, you ride out the wave. The property market, I don't need to sell my house. I still want my house. I still want the asset. I still want to live in it, and I'm enjoying my life in it. And that's how we're going to start seeing cryptos. At the end of the day, it's an asset. You still hold an asset. Yes, that asset has currently lost value against the current asset or the fiat asset that we measure it against. But it hasn't really lost any value in itself. In itself, it's still going places. In itself, it's still got place to grow. In itself, it's a new technology growing. It's a new technology running. So learn that you own the asset. We drive our cars, and we keep on driving cars, and we keep on buying new cars, yet they lose value every single day. But yet we still drive cars. We don't sell our car because it lost its value. Don't do the same thing with crypto. Don't sell it just because it lost value against the current currency that you're measuring it against. Later you're going to learn how to measure it against itself. Okay? Okay, the second account I obviously use is Binance. And when we're talking about Binance.com under scrutiny, what happened was they did leverage trading, and America said you may not trade on Binance.com. So Binance started a Binance.US for US citizens. Recently, Binance went and Canada blocked them, and Canada said you may not. They're busy negotiating now with Canada how to apply Binance to their rules and regulations so people will continue using Binance, because Binance is currently the biggest exchange in the world. Alright, when you talk about exchanges and the size of exchanges, what does it really matter? How big or how small it is? Basically what you are doing when you are buying or selling cryptos, you are not buying from a central governing body or a bank or someone that owns all these coins. You are buying from someone that is currently willing to sell it. Okay? So I cannot buy Cardano from Cardano. Okay? The only people that can earn Cardano is normally the miners or people in the system, in the ecosystem, that are benefiting the system itself. They are the ones that are earning it. They are the ones that can sell it, and I can only buy from somebody. So the difference between an exchange like Valor, for instance, is like going to the corner cafe trying to sell whatever, and then going to a hypermarket and doing the same thing. So when I put in, especially when you're trading with little bits of money in the beginning, $50 and $100, it's easy enough to trade on Valor. But the moment you want to go to $1,000 and do a trade, it's not so easy. Okay? Because the money is suddenly becoming more. Now I want to buy, for instance, I want to buy Bitcoin. I've waited up to an hour before to buy Bitcoin because I want $2,000 of Bitcoin on Valor. It's just, then you wait an hour for the order to be filled because you've got to wait for people to sell it. so that I can buy it, and sell it so that I can buy it, and then they must sell it at the price I want to buy it at, and the price is fluctuating all the time. So by the time half my order is full, the price has changed again, and I've got no more sellers in that price range, so I've got to cancel my order and start all over again at a new price. We do the same thing on Binance, and my order is filled within seconds. Literally, seconds. The reason is, there's millions of people trading at all time in Binance, there's only 20 people trading at a time in Valor.
Exposure.
So your exposure. Okay? So that's the only reason I trade on the bigger platforms. But you don't have to always keep your money on the bigger platforms. You can trade there and move your money back as you need it into Valor, and from Valor move it back into a bank account. So Valor is your way to get in and out of a bank account to be able to use your money. Okay? And then a ton of overseas exchanges. Now recently Binance has also been under scrutiny, because up to now you can open up crypto accounts without telling people who you are, where you are from, what country you live in, giving you your whole pedigree and your underwear size and the whole story that they want. Okay. That up to now was also brilliant. You were able to do that, and you are totally anonymous in the market. That has been clamped down on big time now. Okay. Binance has got to the point, up to about a month ago, you were able to withdraw up to 2 Bitcoin per day out of Binance without having a registered account. Now, obviously with they only revamped that recently, because Bitcoin went up to $65,000, which means I can move $130,000 in a day, every day. They've now clamped down, saying if you have an unverified account, you may only move 0.06 Bitcoin per day, or in 24 hours. Now that makes it only about $1,800, I think it was about 2 or 3 weeks ago. Current price of Bitcoin climbed 0.06. So they're all forcing you now to become verified, and to write down your whole pedigree, and to take photos of yourself and give your ID numbers and your addresses and everything like that. And governments are doing that in the hope that they can control you. Okay? Yes, they can control you up to a certain point, but they still cannot control the crypto market, unfortunately. Okay? Because money can be moved freely. More and more things in the world are becoming accessible to be bought with cryptos. I've done numerous transactions on the internet now, numerous transactions in the world already, where I pay in cryptos. I pay in Litecoin, I pay in US dollar Tether, which is an equivalent to the US dollar, just in a crypto coin. I've paid in Bitcoin, I've paid in Ethereum, I've paid in various things, and no one knows about the transaction. It's a physical transaction between me and you. Money can move from here to overseas in minutes. I can pay you in Litecoin, I can pay someone overseas, like I do my one subscription, I pay in Litecoin. 3 minutes. Transaction complete, money's from here and it's lying in Australia. Done. Okay? No bank involved. Money was received, transaction is complete. Okay? Now, if you try to move money now from South Africa to Australia, it's 7 days. If you're lucky.
If you're lucky.
7 days. Okay? Move a crypto and it's minutes. That's where the market's going. So it's going to become a peer-to-peer payment setup. I was talking just now about the various coins and all the things that each coin is. Basically what the difference is, when I start a business in South Africa, everything works in South African currency. You start one overseas, everything works in the dollar currency. Alright? And then I've got to comply to the Rand's rules when I want to run a company. I've got the Company Act, and I've got all these different things applying, and I've got to apply all these acts and all these various things because I'm trading in the currency of the country. What cryptos have gone and done is, I now get a guy, like he starts Filecoin, it's a filing system, a cloud filing system, and what he's saying is, I'm not going to do this in dollars, because then I've got to apply all the rules and regulations of these governments and everything. I've got this product, but I'm also going to create my own coin in which you can pay if you want to use my product. So you want to use the filing system, you pay me in Filecoin. Okay? You want to use the platform in which you can build an app, you're going to pay me in Cardano. You're going to pay me in Ethereum if you want to use Ethereum's platform. So each one creates his own money system at the same time. So he's saying, here's my platform, but here's my money system. Now I don't have to comply with all these other rules and regulations. We can have our own kingdom. If you want to talk in kingdom. Okay, and I can move money from this kingdom to that kingdom, to that kingdom, to this kingdom, to that kingdom by just swapping out money the whole time. Each one in his own ecosystem. Each one functioning totally independent of each other. So a coin doesn't just exist because a coin exists and because someone decided to build a coin. He's actually got technology behind that coin, written on the blockchain, and he's created his own money to be able to use the system. So the more adoption he gets in the system, the more value the coin gets. Okay, so if his system is great, the coin's going to go through the roof. If the system is terrible, it's going to go nowhere. It's going to fall off the market in a few days' time, or a month, or 2 or 3 months' time, and people lose money in the process. Okay? So when you're trading cryptos, try and find out what the coin stands for. Try and find out what technology is behind it. Okay? And there are platforms. You mentioned one just now?
Which one?
The platform where you find out more about coins.
Paprika.
Paprika? Okay? Is it .com? I'm assuming so, yeah. Paprika.com, CoinGecko as the other one. There's a few of them. Market Cap, Coin Market Cap is the other one. So you want to find out what this, you see this new coin that's running and what is it? It'll go and tell you the basic. It'll give you a short description of what the coin is. It'll go into the full white paper, which I've never understood because it's too technical for me. Okay, I'm not interested in all the white papers and all the stuff. I'm not a computer boffin. Okay, I can't write programs and all that type of stuff. I've just learned how to trade cryptos. All right. So, any questions on the exchanges? Anyone struggling to open an exchange? I know someone spoke to me just now about the verification. Just contact Valor, you will get the verification right. Okay. They are very pedantic about how that photo must look and how far it is, and it must be clear, and it must be everything. It mustn't be too much light and not enough noise, and it's got to be crisp. That's the bottom line. Okay. Anyone else struggling? Someone that doesn't have a crypto account yet? You still haven't opened up anything? Okay. Alright. You haven't opened up anything either? Okay. Okay, then what we then do is, later this afternoon I'll actually go into Binance and show you how to trade and how to buy or sell something. Alright? And how you go through that. But what I want to teach you now is the charting side of things. TradingView is the program that I use. It's www.tradingview.com. TradingView shows you all any single coin. Just open up Trading there. TradingView can show you any single coin, stock. It's the stock market, your S&P 500. You can buy any stock. You can buy Apple. You can buy whatever you want. Well, not buy, but you can look at any trading stock live. It's a live trading platform, okay, from which you can see anything or everything that you want to see. Alright. We just currently use it to watch cryptocurrencies because they've also incorporated cryptocurrencies since about 2015 or 2014, somewhere around there. And you can see any crypto coin. Okay. As you see, our mind's open on Coty just to see what Coty was doing in Binance just now. It's currently at 64 cents. And it was on 65 cents a little bit earlier. And it went there in a question of 2 or 3 days. But that's what we're going to get into now, is breakdown of how to read this chart. Because currently if you look at this chart, it looks very scary. Because all you can see is lines and candles and upwards lines and downwards lines and there's all lines going all over the show and writing all over the screen. And what we want to start doing is break this down for you so you can start understanding a lot better what you are seeing. Okay. So the first thing I want to break it down to, let's just start switching a few things off here. Let's close that. And that one is closed. Let's take this thing away. Just shut that off. Okay. The first thing what you are looking at the moment are these little lines going vertically up or down, is what we call candles. Okay? And they call it a candle because if you look at a normal candle that you burn, it's got a little wick at the top. And sometimes you pull it out and you feel like toki, almost like klein toki wat onder uitsteek. A little wick comes down at the bottom. Okay? So they call these things candles specifically for this thing. It's the Japanese that actually started with this, calling it candles. And if you look at any given candle, let's make it a bit bigger so we can see them a bit better. If I look at this candle, for instance, it's got a line to the top, it's got a body, it's got a line to the top, and it's got a line to the bottom. Okay? And that candle tells me a story. Every single candle tells me a different story. We're going to get to the stories of each candle just now. Alright. Now you get various types of candles that you can be using in trading. Okay? Currently I use what we call a Heiken Ashy candle. And I'll explain to you now what a Heiken Ashy candle is. Okay. If I go and look at normal candles, that's what they're going to look like. And basically what you can see with a normal candle is there's a lot more red and green candles intermingled with each other as the markets are going up and down the whole time. Okay? Now when I'm looking at normal candles, what you will notice with a candle is, if I look for instance at this candle, a green candle is always a candle that started low and went up to a high position. Okay, so the market grew positively since the candle started. Now if I look at the base of this candle, if I highlight any candle, you will notice that at the top of my screen over there, I've got a whole analysis of what's happening on the candles. Alright? So the moment I highlight any, if I hover over any candle, it tells me on this candle, the O stands for the opening price on the candle in this candle. Now currently I'm on a 12-hour chart, so that means every candle represents 12 hours. Okay? And the 12 hours functions basically from 2 o'clock in the morning our time till 2 o'clock in the afternoon if it's a 12-hour candle. But all candles start at 2 o'clock in the morning. I don't know why, I don't know who determined that, but that's the fact. Okay, no matter which time frame I'm on. So if I'm looking at this candle and I look at the O, it's telling me that this candle opened at 2 o'clock this morning at 44.96 cents, or 0.4496 cents. Can you see that if I show you the opening of this? Oh, you can't see if I move away. I don't know how else to point.
Where's your laser pointer?
I don't have one. Anna doesn't have one either. Nou gaan Thijs vir my een.
Kyk of hy.
Sien ek raak met sy sak.
Want we don't got hierdie week. Okay.
I'll say Thijs. That'll help.
Thanks for president.
Ja, assistent.
Maar druk ek nie die knop nie.
Daar rooi knop.
So if I look at the opening price over there, that's the price at which the bottom of this candle started, the body of the candle. Started at 44.4496 cents. Alright? Then I look at the top of the candle, which is the top green part over there. It said this candle went all the way up to 61 cents in the last 12 hours. So from 44.96 where it opened, it went up to a high. Sorry, the high is not there. The high is at the wick of this candle. Okay, it shows me where the candle went in this period. Then my low price is where it went at the bottom of the wick. So it dropped all the way. After it opened there, it dropped down to over there. So it tells me it hit a low of 42.7 cents, 0.4277 cents. But the candle ultimately closed at the top of the body at 56 cents. Okay, if you look at the 56 cents over there. So every candle tells me a story. Now, guys, I'm going to go through information today, and you're probably not going to grasp everything I say right from the start. There's just too much information. All right? If you want to study a bit more, go to a YouTube channel called 99 Bitcoin. Okay? They have a very interesting way of describing to you how things work in layman's terms. He builds 4 or 5 minute videos, and you can ask him just about anything and you'll find a video on that section. Whether it be how do I trade in TradingView or what is the blockchain. He's got an excellent video of what is the blockchain with a little bit of animation, and he explains to you what blockchain is. He'll explain to you what a candle is. He'll explain to you what trading is or what charting is or time frames or whatever. 99 Bitcoin's got a very simplistic way of explaining things to you. Okay. So just by looking at this over here, you guys see now, if I take this highlighting away, you see this candle over here had a bottom. It opened over there, it went all the way up to the top, it then fell back and closed finally over there. Can you understand that? Is there anyone with questions concerning that? Okay, so you've got that. So every candle tells me where it started, where it dropped to at its lowest point, where it shot up to at its highest point, and when it dropped again. Okay? Now what you'll also notice on normal candles is where this candle closed, this candle opens. Okay? So the opening price of this candle, when I highlight it, if I highlight that candle, you see the current one closed at 0.6339. Sorry, this one closed at 0.5643. This one should then open at 0.56, what opened at 0.5637. Slight difference. But in mostly it'll open at the same price that the previous candle closed. And now it tells me in the 12 hours following that candle, In this 12 hours, the market started up there. It shot up to the high point, which is that 58 cents. It then dropped all the way down to 47 cents and finally closed at 52 cents. But because it started higher and closed lower, the candle is now red. Okay, so it tells you in that 12-hour sequence, and if I look at the bottom here, it tells me what 12 hours it's referring to. So it's telling me on the 24th of September at 2 o'clock in the morning, this is the candle. It started at 2 o'clock in the morning and it ran to 2 o'clock in the afternoon. Okay, and that's what it did in those 12 hours. Then the following candle took over from there and it dropped even further. And then the following candle went again from that low point and it shot up higher than what the previous candle was. Alright? Now this is on a 12-hour time frame. Now I can go and change these candles time frame and I can say, listen, I'm looking at this candle, but this is now what it did in 12 hours, but I'd like to see closer what it did over that 12-hour period. And now I'll go and change my chart and make it a, let's say, a 4-hour chart. And I change my time frames up here. Okay? Now every candle on my page represents 4 hours, not 12 hours anymore. Okay? So now in a 12-hour period, I will have 3 candles. So going to this last candle in the 12 hour, that last candle over there, is now going to be represented by these 3 candles here. Okay? So what it ultimately shows me is the 3 candles went up in 2 sessions. It first went up from 2 o'clock till 6 o'clock in the morning, then it climbed again from 6 o'clock till 10 o'clock in the morning, and then it finally hit at 2 o'clock, at 10 o'clock in the morning. Between 10 and 2, it sort of just stayed steady. It just hung there and it did nothing. Okay, and that is currently still playing out. What is the time now? It's 12 minutes past 11. So this candle started at 10 o'clock this morning. It's going to play out until 2 o'clock before it finalizes, this last candle. Okay, now I want to see maybe even further what it's doing. So instead of a 4-hour candle, I go down to a 1-hour candle. Now every candle is representing 1 hour, and the last candle that we were looking at is now represented by 12 of these candles. Now I can start seeing exactly when it climbed in the last, because if I count back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So that candle started over there. Remember, it was a long green candle in the 12 hour. Okay? Now it's telling me what actually happened. In the first hour, nothing. In the second hour, it dropped slightly. It picked up slightly. It stayed steady. It did absolutely nothing. Then, in the 6th hour, it jumped. After that jump, it went sideways again. It went... did not much, climbed slightly, did absolutely nothing, and then it jumped again 4 hours later, it made another jump. And then it stood still again for 2 hours. So it's giving me a bit more detail as to what that exact candle did. And so I can break down every candle right down to a minute. Okay? So instead of seeing 1 candle per hour, I can now see 60 candles over the last hour. And every candle keeps changing as the time frame runs. Okay. It doesn't sound very important as it is right now, but you will notice later when you actually start trading. I always look at the 12-hour chart to make my decisions, because I want to see what's happening over a 12-hour period. Is it going up or down? Once I've determined that this coin is running up, I will come down to the lower time frames to find myself an entry, because I want to see exactly what it's doing on the 5 minutes. Is it up or down right now on the 5 minutes? Because I'm waiting for an entry at the lowest point in the 5 minute, and then I'll break out and I'll buy the coin. Okay, and those details we'll also get to a little bit later once we've identified a lot more things on the chart. This is just to get you an idea. Now these are normal candles. Now what I want to show you is Heiken Ashy candles. And what I like about a Heiken Ashy candle, Heiken Ashy shows me a trend much easier. Because what a Heiken Ashy does is each candle opens at the average price of the previous candle. So you will notice that when I look at a candle here, the previous candle will open at the top of this candle. It will open over there and then move up. In Heiken Ashy, the next candle opens up on the average of the previous high and low. And what that does for me, it averages the market so that I can see a trend much easier. What you will notice in Heiken Ashy, you will very seldom get red and green candles in between each other. Okay, it'll either be a lot of green or a lot of red, which makes you quickly see is the market moving up or is the market moving down. It's just on the eye, it's much easier to pick up a trend when you're using a Heiken Ashy candle. Okay? Initially I thought it's not going to work for me until I actually started applying it. and I realized it was much easier to trade this way. Especially when you're looking at the history of a coin or zooming out of a coin entirely. If I zoom out of this coin, okay, you can quickly see where the runs were, okay, and what the runs looked like. Okay, and if you just look over here, there was a run upwards, all the way up, basically practically all green. This one is all green, slight red pullback, full green, sideways trading, red, green, and then suddenly a full green pull away again, and we're still on the coin of Coty. Okay, and this coin started to pull away at 6 o'clock this morning. So at 6 o'clock this morning, this coin opened up at 52 cents, and it's currently running at 63 cents. So if you bought this coin this morning, or like me, when I saw it at 40 cents over there, okay, and I saw this coin's going to break out, and I'll show you now, I saw it was going to break out when I get to the rest of the trading, and I didn't do anything about it. I was just too busy, and I forgot to get back to the chart. I didn't buy it, and guess what? It broke out. So I analyzed it correctly, I saw everything correctly, I realized this coin's about to break out, and I didn't do anything about it. Now I can either decide, I've lost, or I can just say, you know what, let's wait for the next break.
Let's go global.
Okay, so bottom line. Now the question is, and this is what most people end up doing, you hear about Coty this morning, you quickly run and you go buy Coty here. Okay? Without analyzing the chart first for yourself to determine what Coty is going to do next. Is it going to consolidate now? Is it going to come down first? Because as you will notice with most coins or any coin that runs, what happens is this. Page I can draw. What happens with any coin, page of this, that runs, it does this. It goes up, it always comes slightly back, it hits a resistance level over there, or support level, it breaks up from the support level, it comes down. Or then it'll suddenly come down and break out totally down below your support levels. Okay, and we're going to get to the support and resistance levels when we talk about it right now. But just to give you an idea, they always go up, then they have to come back and find support. It's a rule. I've learned how to read that rule already. Especially when I see a run like this. After a run like this, it has to first pull back. If it doesn't pull back, if a coin just runs and runs and runs and runs, it's a very unhealthy market, which is going to come crashing down just as quickly as it ran up. So if it doesn't go up in cycles and come back and go up and come back and go up and come back, it's not a healthy market. And if you see a coin just running upwards and upwards and upwards, run. Just run. This is not, it's not healthy.
You mean leave it out?
Leave it.
No.
Leave it. It's not healthy. If you don't see a traditional market cycle of ups and downs, ups and downs, ups and downs, run. Okay? Stay out, because that coin's going to hit a point and it's going to go the same V, the same point is going to go, and it's going to whack out and you're going to lose everything that you had. And the coin will take a year or two before it runs that way maybe again. Okay? And that's what happens with many ICOs, initial coin offerings. People run after initial coin offerings. Can you make money in initial coin offerings? Yes, you can. But if you go into initial coin offering, don't go into one of those offerings with all your money. Okay, because whenever the coin launches, you will find the coin spikes, and everyone sells the spike. And then the coin crashes. And then the technology actually takes off and slowly climbs all its way back up to the previous high.
Well, the investors want their return on their money.
They want to return. But ultimately the thing will probably grow, but I never like this initial hype. Okay? It's dangerous. Because if you missed it, and I've done that before on my trading, I know where I want to sell and I get greedy and I sell just $2 higher. And then I watch how this thing runs up 50 cents below my price and comes crashing down and I don't sell. And I've got to wait for the next one. Why? Because I was slightly too greedy on my uptake initially. If I had sold a few cents cheaper, I would have hit my target. Everything in me says sell a few cents cheaper, and I'll teach you how to look at that just now. Okay? But if I do my calculations and I do this, rather walk away with profit than walk away with no profit. Okay? And that's one of the challenges. Now that I've shown you the various candles, and I've spoken to you quickly about time frames, any questions on those two things? Guys, no question's a stupid question. Okay. It's much easier here, we discuss it and everyone benefits from your question. Is there anyone with a question? Do you understand what I've discussed? Okay, you followed me.
Can I ask something about TradingView itself?
Yes.
You've shown us now cryptos, but
Yeah.
does it have other stock
There's
exchange?
everything. Everything. Everything on the stock exchange is available here.
Even JSE stuff?
Everything.
Really?
Any single coin. The moment I want to add something, it asks me here, do I want oil, do I want stock, do I want futures, do I want forex, do I want CFDs, do I want index, what do I want economy, what am I looking for? Any single thing is available here, and what I teach you today can be applied to cryptos, can be applied to any stock. Okay, what I teach you today. On how to read the chart, when it's going up, when it's coming down, when to sell, when not to sell. Is it a good time, is it a bad time, all that type of stuff. Okay? So I can find anything here. And we do watch things like the S&P 500, we do watch things like the Dow Jones, because it does determine what's going to happen in the crypto. If they fall, the cryptos normally pick up. Okay, so we watch things like that to see what they are doing. We do watch things called Bitcoin dominance to see what Bitcoin's dominance is against the rest of the market. Is it dominating the market or is it not?
Where do you find that Bitcoin dominance?
You find it here on TradingView as well.
Do you use Bitcoin dominance to base Bitcoin trading, or do you use Bitcoin
No,
private?
I use Bitcoin dominance to try to tell me when the alts are going to be running or not running. The
I use
alternative
Bitcoin
coins.
private.
So let me just find my Bitcoin dominance here. I've got it on one of my watch lists. I think it's on this one. Not here. But I can find it. Bitcoin dominance. Just take this thing away. Not giving it to me. It might not be a crypto. I wonder if it's at all. Bitcoin dominance. I had it here before. I don't know where it is now.
Oh, yeah, what do you mean?
Okay, but basically it's available. I know it's on one of my things as a coin. I think it's on this one. Here's my Bitcoin dominance. And Bitcoin dominance is currently now running at 41.66. It came down all the way from 42. And we're expecting Bitcoin dominance to come down to about 37, 38 at the moment.
That's now of all the 2.1 trillion.
That's of the 2.1 trillion. Now Bitcoin is dominating the market. Bitcoin's dominance was up last year up to 75%. So meaning that if Bitcoin moved in the wrong way, everything moves in the wrong way. The last times the dominance of that Bitcoin has over the market is falling, and as that is falling, when Bitcoin does something, the rest of the market doesn't necessarily do the same thing. A year ago when Bitcoin just had a sneeze, everything sneezed. Now when Bitcoin sneezes or coughs, everything doesn't necessarily cough with it. Some coins actually turn the opposite direction already. So that's what Bitcoin dominance tells me. How is Bitcoin dominating everything else happening in the market? Okay, but that's not important for today's training. Alright, now we're going to get down to breaking down things on the charts. Let's just minimize this chart a bit. Let's see if we can go back to, we're busy watching Coty. Here we go. You see, I even highlighted the coin earlier this week to say, watch this coin. Yeah. It ran away from me.
Ah, it's net $500 wat jy verloor het nou.
Yeah, I highlighted this one earlier this week as well, saying a run is coming. Guess what? There's the run. I did not buy it because I ran away from my computer for a few days. But just to give you an idea. So as I highlighted them, I said these are coins to watch, and they all ran accordingly. This is the other one. Let's see. This one didn't do what I thought it was going to do. So it was on my list. Okay. Right, now we're going to actually get to physical. I'm going to turn on one of my indicators quickly. Now it looks like a lot of noise on my screen. But we're going to take a lot of the noise off the screen quickly. Let's just go to my settings. And we're going to turn off everything here. Turn off, turn off, turn off. I'll explain to you what all these things are just now. Turn that off. I don't think that's anything. Let's just keep it basic like this at the moment. Let's hide all my drawings.
So moet jy net terug gaan na Coty toe.
Yeah, okay, ons gaan na Coty toe. Here's Coty. The very first thing that we look at when we are trading anything, or when you want to buy a coin or not buy a coin, is what we call a moving average. Okay? Whenever you're looking at a coin, you are never looking at the point of the coin over there, what that run did. Because that run doesn't determine what the rest of the run is going to do or not do, or what the history said it was going to do, or anything like that. So I like looking at what we call the 200 moving average. Now that basically says what is the average of the last 200 candles, whatever time frame that was. If I'm looking at a day chart, every candle represents a day. It's going to tell me what it did for the last 200 days. If I'm looking at a 12-hour chart, it's going to tell me what the candles were doing over the last 200 12-hour cycles. Okay, so the last 100 days.
That's why it looks different.
And that's why every chart is going to look different, because the average is over now 100 days, not over 200 days. If I break that down and I come down to a 1-hour chart, it's going to give me the last 200 hours of what it did. Okay? So whatever time frame you are trading on, and that's the time frames that you are trading on is once again going to come back to what type of trader are you. Just go back here. Okay? If you're a hodler, you're not even going to worry, because you're not trading daily. Okay, you bought a coin, you held it, you're just keeping it. And in a year time, you're going to sell it. Okay? If you're an investor, you're not really worried about the last 200 cycles, whatever it was. If you're a day trader, you are. You want to know what the last 200 cycles were. You want to trade or buy this coin or sell this coin and know when the next low or next high is. So the very, very, very first rule that you learn is you watch your 200 moving average. So whenever I'm scanning through my coins, my list of coins, and once again, guys, don't go and put 100 coins on your list. Okay? Find 10 or 20 coins that you believe are going to run, or that you believe are good coins. Stick to your guns. Okay, there's lots of places. You can go to Crypto Bubbles and you can see all the coins running, and I can show you Crypto Bubbles just now. Let's see if I've got it here. So I'll show you what that is. It's not here. Let's just open Crypto Bubbles. This is how a lot of people find their coins. This is basically a ton of coins that are busy trading right now. Currently we're looking at what they did in the last week. And if we look at Cello in the last week, it grew by 38%, CLR grew by 47%, H-bar went down by 21%, HT went down by 37%. Now in a bull market, we've got to talk about bulls and bear market. Bull market is a market going upwards. Okay, so always starting low and it's flying. The market is boiling. And a bear market is when the market is going red. Everything is coming down, like it has been for the last week again. Everything just hit the top and everything is just flying downwards. Okay, and it's just crashing. So in a bull market, when the market is going up, this screen is mostly green. Okay. Now what guys are doing is they look at this and they say, okay, this coin's running, I better trade this coin. They run to the coin, they want to buy the coin without analyzing the coin, and then they end up crashing in the coin. Okay, and you're going to have to wait with your money, especially when you're starting new in trading. You don't have that much cash that you're necessarily trading with. Let's say you're trading with $100. Now you've put $100 into a coin that was going to double your money, and suddenly it crashed and it's now 50% of its value. You've got no extra money to put back into your portfolio. Now you're going to have to wait. Whether it be 2 months, 3 months, 5 months, 6 months to make your money back before you can actually sell the coin. When you're starting out in trading, you want to double your money, you're going to be trading day trading. Unless you, as Anna says, you want to be a hodler, you just want to buy and leave. Okay? But if you want to be on the run and focusing, you're making this like a job, but I'm looking in, I'm running with it, this is what you're going to be doing. Okay? Look at the charts in the morning, put in your buy signals, put in your sell signals, and walk away. Done. Alright?
You can click on the bubbles, I think.
Yeah, you can, I think. And it'll tell you the market cap is currently $1.05 billion. 24-hour volume was $1.3 billion. That's what happened in the seller network, and that's obviously why it went up, because all that money moved into the market. And it tells you that it made 45% for the week, it's made 306% for the month, it's made 3,674% for the year.
Why, jumping?
Okay? So that's what people do.
Yeah, not now.
Okay? The question is, what's it doing right now? Because I want to make money in the next 2 or 3 days. Do I buy it now? Do I wait? Do I what? Okay.
Maar miskien as jy net hou is wanneer 'n coin opgaan en hy herstel soos daar of hy
Ja.
daai punt dis waar die beste koop lê.
Ja, hieronder.
Nee, as hy so net so teruggetrek het.
Ja, as hy klaar, maar sonder daarby kom en dan get to support and resistance levels. Okay. We'll explain that because that is the best place to buy a coin. Okay.
Wait for the breakout.
So this was just to show you a lot of people get their coins here. Is it a bad place to get coins? Not necessarily if you've got nothing to start with or to start identifying coins. I would prefer that you go listen to a few people on the internet. Go to Crypto Banter. Very good guy to listen to, good information. To me, he's got a bit of noise because he's a presenter before he's a crypto trader, but his information is solid. He's got brilliant information if you can get through the noise. The other guy I listen to is AM Crypto or I Am Crypto, Alex. Okay, he goes straight into the chart. He will open up his video 7 minutes later, boom, 7 minutes of technical analysis, straight in out.
That's what you want.
Okay,
Crypto Revolution is also a good one.
Crypto Revolution.
Chris.
So find the guys on YouTube that you can follow, on Twitter that you can follow, that you trust. Don't listen to bulk media and try and trade like that. You're going to trade yourself into a minus really quickly. All right. Let's go back into this one over here. So the first thing you're looking at, whenever I find a coin, and by the way, use your mouse when you trade, it's much easier because this little wheelie thing over here, this little wheel, expands and contracts the chart very quickly. It's much easier like this than trying to expand and contract it manually by hand. Okay. So when I contract my chart like this, I can see an overview. I'm currently on a 1 hour chart, let's go to a 12-hour chart. This is where I like trading. And if the chart suddenly, you remember, you saw I changed now from a 1 hour chart where I could see everything on my chart to a 12-hour chart where I can see nothing on my chart. I go and click this auto button at the bottom and it balances my chart out so that I can actually see the chart. Okay. So what I want to see when I'm trading and I'm looking at my 200 moving averages, is my 200 moving average moving up or is my 200 average currently moving down? Over a longer trend, this is now Coty, you will notice over a longer time, Coty looks like basically started out over here on the 26th of February last year. Okay, I'm on a 12-hour chart now. And for a long time, you'll watch the 200 moving average, which is slightly up, down, and then suddenly around here, February this year, it started breaking out. And there goes the average. There it shot up, average went up, then it broke down in May, June. The big fall came in May. There it is, 20th of May. Market came totally down, and now it shot up, but you can see the 200 moving average is only turning around now. So whenever you're scanning through your list of 10 or 20 coins, what is the point of the 200 doing? Is it going up or is it going down? If it's going down, skip, next coin. Okay? To give you an idea, let's run through a few coins. If we go to Aave, you'll see it went up, it came down, it's lying level at the moment. I wouldn't trade it. Okay, it's not a coin I'd buy right now. Let's go to ADA. ADA, on an upwards trend, it's up, leveled off, up. So even though it had a big fall now, it's overall, on the last 200 candles, it's still moving up. Good coin to start looking at. So that's my first possible buy signal for any coin. It's not the only one, but it's your first signal. It's your most important signal. Go to the next coin. It's ultimately moving up. Okay? Go to the next coin. Band. Band up, down. It's sort of trying to go up. It's not sure what it wants to do. I won't touch it. Not yet. Okay. Are you getting the gist of what I'm showing you here? You're understanding that basic? Alright. The next thing we want to look at when we're looking at a coin, once we've now identified that coin, we're going to add another line to our chart. Alright? And the next line we want to add to our chart, I'll go back to my settings, I want to put on my 55 moving average. Okay. Now the 55 moving average, as the name says, where the 200 was the last 200 candles, okay, the 55 is now the last 55 candles. Now you can set whatever moving average you like, you can set it at any number. We've just found that these specific numbers work very well. Okay. Now what you want to see when you're looking at two different moving averages, like your 200 moving average and your 55 moving average, is number one, is my 200 moving average moving upwards or downwards? Number 2, we talk about a golden cross or a death cross. Now a golden cross is when a lower time frame moving average crosses over a higher time frame moving average in an upwards direction. Lower time frame moving average, my 55. Okay, we go back over here. My 55 moving average has crossed over my 200 moving average in an upwards direction. That we have termed, something we've termed ourselves, amongst one of the courses that I did, we call that a theta cross. When the 55 crosses the 200. Now what we've noticed, whenever a theta cross takes place, the market is about to explode. Okay? Every time a theta cross has taken place, the market is about to explode. Okay? So even though it's moved up and it's slightly down, it is still above my 200. And we've had the cross. So until this turns down and crosses back there, giving me a death cross, which tells me the market's going to come down again. Okay? It's a coin that you can look at. Now there's once again other things we're going to be looking at. So the first thing you always identify is, what's my 200 moving average doing? Topical view op die
Staan, dood, stil.
okay. What's my 200 moving average doing? And then what is my 55 moving average doing? Is it in a golden cross or is it in a death cross? Alright. Now, the other thing that's very important, if my 55 moving average is busy on a downward trend, if my, let's go to another chart and see if we can find a chart that's doing that. I'll give you an example. That's basically level. I'm trying to find a chart. I'm just running through the charts quickly. See if I can find what I'm looking for. Looks like everything is starting to move up. What I want to show you now is not here. Okay. Let's just look at this one for instance. V-chain. You will see that we had the golden cross. The 55 did cross the 200. But when it crossed, the 200 was on its way down. When they cross, when the 200 is moving down, we call that a fake out. Okay? So it's going to go up and it's going to immediately turn around, and I can already see that exactly what it did. Do you notice that where it crossed, the 200 was moving downwards? Can you see the 200 moving down? While it was moving down, my 55 moving average crossed over. That tells me that that crossover is going to be short-lived. It's going to go and it's going to turn around again. When this crossover takes place, when my 200 is moving up, the market's going to explode. Does that make sense? Okay. So the 200 must always be moving in an upwards direction on whichever time frame I'm watching. Okay? I normally watch a 4-hour chart or a 12-hour chart. I first want the turnaround to be there before I climb into a coin. I want to see the turnaround is there. You can go to a minute chart and the turnaround's coming all the time. It's up, down, up, down, up, down, up, down, up, down, up, down. It's on a 1 minute. Every candle is 1 minute. But it's very difficult. It's much more difficult to trade there. You're in and out the whole time. You're watching your computer all the time. Okay, that's not who I am. There are some of you that might be able to do that and actually love doing that. I know people that love doing that. I don't love doing that. Okay. So I like seeing on a 4-hour or 12-hour chart that the market is turning, and until I can see it there, I don't look at my lower time frames to trade it. Alright. Let's find a coin where it's actually, let's go back to Coty. Let's see if Coty is showing us. Go back to Coty. Have a look at Coty. When it crossed, it was basically at the bottom. This red turned around, and the red started going up, and as the red, the green just shot through the roof. It crossed basically at the bottom over there, and I'll show you now how you can identify this exactly. But it crossed basically at the bottom as this thing was rounding out. Green, I would not have bought it there yet. Okay, I would have waited for one or two other things which I'll teach you just now. But to determine where this is, it's going upwards, and Coty is literally exploding concerning the market. Let's see if we can find something else that's also doing the same thing. No. Here's a typical example again of a fake out. Crossed over, but this just ran level.